Hey everybody, what's going on? The real estate market has been so crazy busy in the last couple weeks. Ever since January 1st, we saw an increase in showing activity, buyer activity. I just signed a couple new listings that I want to share with you today, but our market is really ticking along. We just came off of one of the slowest years that we've had. It was the slowest year in the number of sales in the GTA that we've had in the last 23 years since the year 2000. So it was a pretty slow year. And the buyer confidence was super low. That was one of the reasons why we had such a bad year. Hey, just really quickly, if you like this kind of content, if you're following the real estate market in the GTA, please subscribe to the channel, like the video, give me a comment, tell me what your buyer criteria is, tell me the trials and tribulations, tell me the hard, difficult things that you've been having when dealing in our marketplace right now. Our listing inventory is fairly low, but the buyer confidence has really returned. The last few, I think it's the last 4 Bank of Canada meetings, we've seen them hold our overnight rate, which has been great. And that has been done with the narrative of probably dropping rates by the end of the year. Now, I don't expect there to be a major drop, but we do expect them to come down just a little bit, which would be incredible. But what that really does, forget about buyer affordability, forget about the lack of inventory, forget about, a lot of buyers in the market looking for not a lot of listings. And we're seeing that in both the resale and in the new development pre-construction world. And we're also seeing it in the tenant rental world, which I'll talk about today. But the buyer confidence last year was super low. And the reason was in 2023, the rates were going up, right? We saw the rates go from 1% to 5%. And with that, we saw our prices come down from the peak March of 2022. We've seen them come down 22% on average in the GTA. So buyers really pulled themselves back and said, hey, I'm not gonna buy while the rates are going up and while prices are going down. And even though affordability is an issue, we have enough buyers in our marketplace that aren't worried about affordability that we can still have the number of transactions that we normally have in our market for things to really tick along and to see appreciation over time. So now the narrative is, our prices are down 22%. The rates are not going to be going up anymore. The Bank of Canada has held them the last 4 meetings, and we are expecting them to eventually come down. And when we see them come down, even if we just see them keep holding, I believe we're going to see our prices start to increase. So as of January 1st to today, I'm shooting this on January 30th, we've seen a 71% increase in the showings on our listings in the GTA from this January to last January. So this January, we've had 71% more showings on our listings than we had in January of last year. That is super interesting because that is a leading factor, right? That's a leading indication that we are going to see more offers and we're going to see the listings start to sell a lot quicker. Our average days on market right now is about 33, 32 days, and that's across all price ranges in the GTA. And I really believe that we're going to see that coming down, and we are seeing that right now. So I just signed 2 new listings. The first one is number 10 Tiffany Lane. This is a 3-story, 3-bedroom, 3-bathroom townhouse unit. It is a parcel of tied land. It's not a condo, but it is on a parcel of tied land. So what that means is when these are built and the road allowances aren't wide enough to let in the municipality local garbage removal trucks or snow removal trucks, what they do is that development, and this one is in Weaver's Mill, that development has to pay for, by the homeowners, they have to pay for the garbage removal and the snow removal. So there's a $115 fee per month in owning this house. But it's beautiful. It was listed last year but didn't sell, and it didn't sell for a few reasons. The first was just the market wasn't at where the market is at now. Things were really slow. As I mentioned, we had the lowest number of sales since the year 2000, and really things just weren't selling unless they were really aggressively priced, which this one was priced decently. So we relisted it. We took it from another brokerage, relisted it. We got the house painted. It was staged. It was cleaned. I changed a few light fixtures, and we relisted it at the same price. And we've had amazing showing activity. I'm going to be hosting an open house this weekend, and things have really been ticking along there, and the seller is super happy because they can tell that their listing is being taken more seriously. It's being marketed more aggressively. It looks a lot better. It shows a lot better. The pictures online and its online presence looks a lot brighter than it did before with the paint, the staging, the cleaning, and the fact that we changed a few light fixtures out has really made a difference. So I'll show you guys that one. And then also I just listed one, it's coming soon right now as we prepare the listing, at 12903 9th Line. This is a country property. It's a ranch style bungalow with a double car garage. It has 2 hydro meters on it. The previous owner actually used the garage as their business. So there's 200 amp service in the garage, and then there's 150 amp service in the house. Both are separately metered, which is amazing. And the location is just north of Glen Williams. So this property is perfect for somebody who wants to live in the country, have that country feel, but also not be totally isolated, right? This is only 4 minutes from Glen Williams in Georgetown, where you have all your shopping, your bakeries, your cafes, your schools, and all the rest. So this is a really great location. It's also a good location for somebody to come in, purchase the property, and build their dream house on it. We're seeing that happen around us rurally all over the place. Buyers are coming in and they're building their dream home on these nice, big, comfortable country lots that are close to town. So that is somebody that I would assume is most likely going to be a buyer of this property, or just someone that just likes a country feel and can only afford a bungalow. So that one's going to be listed for $1.125 million and should be on the market in the next couple weeks. Now let's talk about the rental market. What have I been seeing in the rental market? How are things looking? I know that there's a lot of headlines talking about the fact that rent prices are increasing, and we're definitely feeling that. I just had a unit come up. I had a tenant call me, hey Brock, I'm gonna be moving out and I'm giving my 60 days notice. So they're gonna be leaving March 1st. Now there's a few things in the house that I wanna do in terms of paint and just a little, few minor repairs that I'll be doing once they move out, just to bring it back up. And I want to maximize the market rents that I can get on that property. So I wanted to find somebody to move in. March 15th was my ideal date. And because it was tenanted, I didn't want to bug the tenants with a ton of showings. So what I did was I booked everybody in the same time frame. So I had probably 10 to 12 groups of potential tenants all come see the property within a 1 hour window. And it was mayhem. I had people bidding on it. I had people saying, oh, my credit score is 690 and I make $70,000 a year. And then somebody in the back would say, my credit score is 750 and I make $120,000 a year. My credit score is 800 and I make this much a year and I'll take it this date. So it was really crazy. Next time I have something come available, I'm gonna space them out a little bit and not have the showings directly on top of each other. It was a little bit awkward, but the way that I dealt with it was, hey, I'm not making any decisions today. What I am doing is showing you the property, making sure that you are aware of what you're going to be applying to rent, but I'm going to be giving everyone here today a rental application that they can fill out. Then I can take those back, I can look over them, and then ask additional questions and make a decision from there. On all the rentals that I help facilitate for clients or that I facilitate for myself, I get a rental application filled out, I pull credit, and I want to make sure that I can have some sort of proof of income, proof of employment, and then I want to have it as a ratio. So if they're making $100,000 a year, the maximum that they can afford in my eyes is a place that's going to cost $33,000 a year. So if I have a place listed for $2,000 a month, that's going to be $24,000 a year. I want someone that's going to be making at least $75,000, and that's for household income. Because if it's going to be half their income or 60% of their income, then I'm worried. What if they have to do a car repair that month? What if something happens with their job, right? I want to make sure that there's some insulation from things happening in their life. And if we can lower the ratio of the cost of the unit to their gross revenue, then we're making sure that we're insulating ourselves from that risk a little bit. And then the credit check is something that's really important too. I find it's a great way to reference how good someone is at making their payments. And then I can also get a glimpse into their credit application and what that looks like. Have they had lines of credits or credit cards that have been maxed out and they're just making their minimum payments? Or have they been really good with their credit? Maybe they have a line of credit for $55,000, but they only have $5,000 on it. And then I know, okay, they can manage their bills, they're financially responsible, and they make making their payments a priority in their life. So I really think that checking credit is something that is great for a landlord to do, and a good tenant is okay with you doing that. So I find that really important. But the rental market is like mayhem. It's crazy. We have lots of tenants, a lot of potential people who want to live in these neighborhoods, but there's just no inventory. So what that's going to do is drive up price. And we haven't seen massive price increases in our rental market, but we have seen the prices really stay high and continue to creep up a little bit. And it makes it nice because when we have a tenant turnover, usually even the best tenants in the world, when they leave, there's something to do to the unit. Maybe there's a baseboard that's scuffed that needs fixed. Maybe there's an appliance that needs to be replaced. There's usually something to do. So if on turnover we're coming in and we're spending some money, it's nice to know that we're going to have some kind of return on that because we're going to be able to rent that unit out for more money than the original tenant was paying. So I'm loving that, but I'm not loving it from the standpoint of I have people that I deal with, I have friends of mine, I have family members that are trying to afford something in our neighborhood, in our market, and it just doesn't exist. The affordable rent does not exist. We're seeing a 2-bedroom basement apartment rent for $2,300, $2,400 a month, all inclusive. A 1-bedroom's gonna rent for $2,100, and we're seeing a 3-bedroom upstairs unit renting for about $2,500 to $2,700 a month. So the rents are really expensive. If you're someone making $60,000 a year, based on my calculations, you can only afford something that is $20,000 a year. So when you look at that on a monthly basis, the $1,700, $1,800 a month unit is really hard to come across in our market. And if it does come up, it's probably not finished the kind of way that that tenant would want. So that's something that is definitely a difficulty in our market. But just like our housing issue with the sales, the housing issue with the tenants is the problem is totally created from a lack of inventory. If we had more incentives for landlords, if we had the ability to easily create more units with our municipality and with our zoning, it would make the rents more affordable because these tenants would have more choice. But right now, there's nothing even on the market. And when it is, there's a bidding war on it. We have 10 people show up in 1 hour that are all fighting with each other to try to get the unit. This is a real problem. But, right, there's always a silver lining. There's always another side to the coin. There's always another perspective that you can look at things from. For our clients that are investors, this creates a massive opportunity because if you can buy an old building with outdated rents, flip it around, force some turnover or just have some natural turnover, you're going to be increasing the NOI on that building, right? Your net operating income can skyrocket when you have turnover. We're seeing buildings that are coming up for sale. The tenants have been there for 10, 15, 20 years. And when they move, they're paying $800 a month for their rent on rent control. And when they move, we can increase the rent prices. And that really makes a difference in our pocket at the end of the month. The hard part is finding the deal and finding the building where you can do that because, again, we have a lack of inventory. There's not much of them. But it creates a massive opportunity for someone who's patient, someone who can work with us to find off-market deals, someone who can be patient enough to wait for the right property to come up on the market. You know, maybe you buy it and it breaks even when you first buy it, but over time, that property is going to be a real cash flowing asset for you that you can stash away in your portfolio and really build long-term wealth on that. So we're loving that part of the market, but there is a problem for tenants. There is a problem for families that want to stay in a community. And there's a problem for landlords not wanting to keep up their property because why would they? They're getting outdated rents, right? If you have a 10-plex, let's say you have an apartment building with 10 units in it, and you have people complaining about, you know, oh, we want this fixed, our windows are outdated, we want a new HVAC system, but things right now are working. A landlord that's making $800 a month for a unit that can now rent at the market rents of $2,000 a month, they're most likely not going to want to do that work because there is no incentive for them. And that creates a real problem in our market as well, where we're seeing a lot of these landlords not be super diligent in the things that they're doing because they're not seeing a return on that. Versus a market like Florida or Texas or something where they can change the rental amount every year. There's no rent control. So when they go in, they want to make sure that they're providing the proper things for their tenant because they most likely are going to be renegotiating that tenancy agreement, that lease agreement every single year. So that's a problem in our market. We just need more rental units for these tenants, not only to drive price down a little bit, but just to give them somewhere to live. It really is unfair, and I don't want to totally capitalize on that. And I don't want to, be unfair to these people that are looking, but it's an open, fair market. We want fair market rents. We're not trying to be greedy, and we're really just trying to get A+ good tenants in there so that they're easier to manage. We're making sure that they have a nice, safe, beautiful home to live in, and we're just sitting back and collecting the rent every single month. But we also want to make sure that we're upkeeping these buildings so that they do hold their value. It's easier to rent to other tenants if there's a vacancy, and it just kind of safeguards and cushions our investment a little bit. So we're trying to make sure that we are doing that with all the units that we have, and just trying to help our investor clients really maximize the profitability of their investment. And it makes it a lot easier to manage that asset if you're going to have good tenants in there. So that's where we're at. The real estate market right now has been really good. Coming off of last year where we saw a really low number of sales, I think we're definitely going to be outpacing that this year. I don't expect it to be like 2021 where we had these earth-shattering, groundbreaking number of transactions in a year, and we saw 33% or 30% price increase from the beginning of the year to the end of the year. I don't expect to see that, but I do expect to see our prices follow the trend that they have for the last 60 years, that 3 to 5 or 3 to 6% increase over time. And that would be really great for our market, but it's going to depend heavily on what they do with interest rates. I'm loving the narrative right now because the buyer's confidence has returned to the market. We're seeing people feeling a lot more comfortable in shopping for homes. We're seeing people a lot more comfortable in submitting offers because the narrative is we're going to be holding rates with the possibility of them dropping hopefully by the end of the year, even just a little bit. If we saw a 0.5%, 0.5% decrease in rates, that would make our market go crazy because buyers' confidence would return. And even though there's an affordability issue, like I mentioned, we just don't have enough units, we don't have enough inventory, we don't have enough houses to fill the current demand that we have. So the small percentage of people that can afford it are bidding on these properties, and we're starting to see that return a little bit. And as we progress into our spring market, I can't wait to see what's going to happen with waterfront, what's going to happen with in-town, what's going to happen with country properties, what's going to happen with the condo market. But things are definitely looking up. I've noticed it in my business. I've been way more busy this January than I was in November and December of last year. And I'm definitely seeing the buyer activity return to our market. So our sellers are loving that. And the buyers are loving it too because they're feeling more comfortable and confident, which you should be. You're making a massive investment. You should be comfortable. You should be confident in moving forward. So thanks for watching this video, guys. Please, please, please subscribe to the channel, like the video, and leave a comment. I want to hear about the troubles that you're having in the market. I want to hear what you're experiencing in the real estate market, and I would love to hear your thoughts. Thanks so much for watching. We'll see you on the next video.